Craftsman Days are here at Lowe's with big savings on the tools you need. Save $100 on the Craftsman V20 6-Tool Power Tool Combo Kit, now at $199. No matter what the project is, Craftsman's high-quality, high-performance products empower you to build on. Stop by your nearest Lowe's store and check out the full line of Craftsman tools today. Valid through 6/18 while supplies last. Selection varies by location.
People really don't know what their expenses will be because they don't know how long that they're going to live.
Americans are worried they won't have enough saved for retirement now more than ever.
Retirement's going to cost for many folks over $1 million.
Is no sure thing in investing, but a lot of people think that annuities may come close to that.
It's going to more safe things that they know. If they know they're going to need that money to supplement their retirement, well, then you can't play that risk.
This is the Safe Money and Retirement Show with Jon Heischman Sr., founder and partner of Heischman Financial Services, serving the Columbus and surrounding areas. Jon specializes in educating pre-retirees and retirees about safe money strategies and ideas. Now, it's the Safe Money and Retirement Show. Here's Jon Heischman Sr.
Good morning. This is Jon Heischman. I'm bringing you the Safe Money and Retirement Show. I'm glad you took the time to tune in to find out how I can help you with your retirement planning. Quite often, I am asked the question, how much risk should I be taking today? I'm approaching retirement or in retirement, and based on my current retirement assets that I've accumulated and looking into the future as far as using that money for retirement income, how much risk should I be taking? Should I be taking risk? So I thought, since this question is so popular today, it would be a good topic for this week's show. The question starts out as risk capacity. This is a concept that is not universally ignored by the financial and retirement planning community, but it's close. Most consumers, when they think of defining investment risk, will naturally think of risk tolerance. What is risk tolerance then? Risk tolerance is someone's personal attitude about investment risk, meaning how comfortable is someone with dramatic losses in their investment portfolio when the stock market goes negative. I'll give you an example. Let's say a person doesn't like to lose more than 10% of their money at any given time in the market. This person I would classify as having a fairly low risk tolerance. On the other hand, someone who doesn't mind losing 35% or more at any given time in the market, I have to classify them with a fairly high risk tolerance. So we have to find out, when I talk about percentages, where you fall. And this really needs to be addressed going into retirement and during retirement. Going back to risk capacity, we define differently than risk tolerance. The definition of risk capacity: this is the amount of risk you need to take in order to reach your investment goals, either asset accumulation, income and retirement, or both. Risk capacity is supposed to be more of a facts and circumstance determination that takes the emotion out of the equation. I think this definition sounds simple enough, but when applying this, the definition seems to be a little bit different than what happens in the real world. When I work with an individual, whether it's a client or a potential new client, I always address risk tolerance and risk capacity. Even though they're different, they go hand in hand. Do you have the capacity to take risk? And if so, how much? What's your risk tolerance? One thing about our firm, which is Heischman Financial Services, which consists of a partnership between myself and my son, Jon, we're able to put together a plan and adjust that plan based on risk tolerance and risk capacity. We're independent, not tied to any corporate entity, with the ability to place your money in multiple types of plans that fits your risk tolerance and your capacity to take risk. And today, since so many people are questioning where their money should be, how much risk should I take? And do I have the capacity to take risk? We want to offer a free, no obligation evaluation of where you're at today. What are your goals and objectives? Where will you be in the future throughout your retirement? So we welcome the opportunity to look at your plan and see if it matches to your risk tolerance and an honest assessment of your risk capacity. Can you and should you be taking this risk during retirement? Here's the number to call, 888-426-0177. Again, 888-426-0177. Look forward to hearing from you and sharing our ideas. Okay, let's dig into a simple example, which I think is very real today. Let's assume you're age 65 years old and you need to create $50,000 a year in income during retirement to live comfortably. Assume you have $700,000 of investable assets as your only source to create that income stream. And you would like your money not to run out until age 90. Personally, I'd like to see it go longer simply because of longevity today, 95 or even age 100. But let's go ahead with this example. What rate of return do you need? And this is going to be net after taxes, expenses, to create that $50,000 a year in income. So you're not going to run out of money. 5.82% net, which is more like 8% gross return if you factor in any fees and taxes. By the strict definition, the risk capacity would allow our example client to invest in whatever is needed to generate that 5.82% net rate of return no matter how risky the investment is. Now, I want you to keep in mind that this is mainly a secular discussion about risk capacity. But in the real world, you would use both risk capacity and risk tolerance to determine what investments are right for you. Once again, that's what we do. So you might be thinking, well, what's the problem? The stock market can't and won't guarantee a 5.82% net return each year for 25 years. The chances are significant, almost certain, that one or more significant downturns in the market is going to occur during 25-year retirement period. When these downturns occur, it will have a major determining impact on whether the example client will be able to withdraw $50,000 each year during retirement. Risk capacity in the real world, let's look at a simple question you need to keep in mind relating to this example I'm giving you that will get to the heart of understanding risk capacity. In your retirement years, would you rather be a little short on money more frequently, or would you rather have huge income shortfalls on a less frequent basis? Would you rather have 10 individual years where you were $5,000 short of that $50,000 spendable income? Or would you rather have 3 years where you were $16,666 short? If you prefer more often but smaller shortfalls, then you have a lower risk capacity for risk compared to someone who is okay with fewer but more sizable shortfalls. The income amount was the same, $50,000, but one person's risk capacity can be different than another's, and because of this, a different investment mix to reach the $50,000 per year goal would need to be used. I'm going to take a short break at this point, but stay tuned. I'm going to continue my discussion on risk capacity and risk tolerance. I'll be right back. Have you heard about the color of money, which is the model of investing where your money is categorized into 3 different colors: yellow, green, and red? Yellow money is liquidity, cash reserves, and an emergency fund. Green money has no risk, an average to above average rate of return. It also generates additional retirement income guaranteed for life. Red money is money at risk with maximum potential growth. This is Jon Heischman from the Safe Money and Retirement Show, and I want to make sure your retirement plan assets are positioned correctly in these colors. Call me at 888-426-0177. Again, 888-426-0177.
Welcome back to the Safe Money and Retirement Show with Jon Heischman. To contact Jon, the number to call is 1-888-426-0177. That's 1-888-426-0177. Once again, here's Jon Heischman.
Welcome back to the Safe Money and Retirement Show. I'm your host, Jon Heischman. I want to continue on my topic of risk capacity and risk tolerance. But first, I want to make sure that you have my website, HeischmanFS.com. HeischmanFS.com. If you want to replay today's show or past shows, they are available.
Craftsman Days are here at Lowe's with big savings on the tools you need. Right now, get a free select tool when you buy the Craftsman V20 2-pack battery kit. Whether it's the backyard, the bathroom, or beyond, Craftsman has the tools to help you power through and get the project done right. Because DIYing is unpredictable, but your tools shouldn't be. Shop Craftsman at Lowe's today. Valid through 6/18 while supplies last. Selection varies by location.
On the website, and you can call me at the number I give you throughout the show. Well, I'll just go ahead and give it to you again. 888-426-0177. And we can talk about your situation, my views on risk, and how important it is in income planning. Now, let me give you a different view of risk capacity. A different way to define risk capacity is whether an investor is in a position to assume risk. And if so, how much? Very important, how much? Meaning, will negative returns adversely affect the investment goals and objectives that you have? I want to go back to my example where a retiree needs $50,000 a year of income. There is a little wiggle room for error in the previous example. There is just enough money to generate $50,000 a year if things go right. And I say if with a capital I, because the risk capacity should be fairly low. And part of the discussion with each client should be how they would cope should they have years with shortfall in income. Now, those of you that listened to my show, I think it was a couple of weeks ago, where I talked about sequence of returns risk. Too much risk, too soon in retirement, with multiple years of a down market. Please remember, the most important thing in retirement income planning is your income. I think first and foremost, we design an income plan that's guaranteed. It's going to last you a lifetime. Then we take a look at the risk factors. All right, I want to switch back to my example and assume one change, and that client has $1 million in investable assets instead of the $700,000 that I talked about before. How does this change the risk capacity question? The need to generate a 5.82% annual net rate of return is no longer there. The investments only need to return a net 2.23% rate of return in order to generate a $50,000 annual income for 25 years before the account runs out of money. Once again, this is just an example. I'm a little bit uncomfortable with this example because, as I mentioned, I'd like to see that money continue longer, 95 or 100, because longevity is so important today. But it's easy to change the numbers based on living to age 95 instead of 90. So in this example, that means there's a lot of room with the investments either way. Or in other words, the investments could be riskier because they don't work out as well as earlier planned for this investor with $700,000. There will still be an ample assets here to pay $50,000 a year for that particular income stream. Now, risk tolerance and risk capacity, in some ways they go together, but they don't always align. Here's what we have. We have an investor might have a high risk tolerance, doesn't mind big losses in the market, but because of a limited amount of money available to go into the market, this creates a low risk capacity. So in this circumstance, it would be wise to err on the side of caution and use more conservative investments. And this is what each retiree has to find out, preferably at the time we're setting up an income plan. On the other hand, there might be an investor who has a low risk tolerance, meaning wants to avoid big losses in the market, but a high risk capacity due to an excess of assets needed to generate the needed retirement income. So in this circumstance, I would agree that it would make sense to invest a little more aggressively. But once again, when we look at investing in retirement, I think it's critical that we have the income plan in place. If you lose money in the market and you have your income plan in place, the money you have in the market has losses. It's not going to affect your income compared to relying on invested money in the market strictly for your income. I've had radio listeners call me to schedule an appointment. They're concerned about they didn't have an income plan that guaranteed their income. I like both, but get your guaranteed income set up for retirement first, then let's invest. And that investing will be based on your capacity to allow money for risk. And then what is your risk tolerance? And very simply, that tells me where your money should be invested. Call me about this concept. I just think it is so important for every retiree to address these issues. 888-426-0177, 888-426-0177. Also, what I see often, unfortunately, the vast majority of investors really do not have investments that match their risk tolerance. That's what I'm saying. That's what we need to look at, and their capacity for risk. The programs available today that we're able to use really helps out. But on a more value-added situation, one way I like to determine accurately somebody's risk capacity is by asking a series of questions. There is different risk tolerance questions, and they're all effective. But getting to know each client helps me to determine what their goals and objectives are, along with a risk tolerance test. Gives that extra relationship and the ability to work with each client, both now and in the future. I hope I've given you some good information to think about. Where are you today? Where will you be years down the road in retirement as far as how is risk going to affect your retirement income? I'd like to hear your views and your concerns, answer your questions, whether it's setting up a meeting or scheduling a phone conversation that's going to help you address this very important situation. 888-426-0177. Again, 888-426-0177. That number is available 24/7, and your message will be passed on to me for follow-up. I want to thank you for listening to the Safe Money and Retirement Show. I'm your host, Jon Heischman.
The Safe Money and Retirement Show with Jon Heischman Sr. To get in touch with Jon, call 1-888-426-0177. That's 1-888-426-0177. For more information about Heischman Financial Services, visit their website, HeischmanFS.com. That's HeischmanFS.com. Join us again next time for the Safe Money and Retirement Show with Jon Heischman Sr.